Hello friends and welcome to this interesting webinar on opportunities for MFDs in commercial real estate. Friends, in the first series of this webinar, we have discussed about ABC of commercial real estate. So please check out this video on our YouTube channel. In today's episode, we will explore how commercial real estate products open newer revenue stream for you. So to help us understand the opportunities in commercial real estate products, today we have with us Nihar Shah, Director of Investment at Strata. Strata is a real estate platform. So friends, Nihar has over 10 years of experience in private equity and wealth management space. So without wasting time, let me welcome Nihar. Welcome Nihar.
Thank you, Nishant, and thank you everyone for joining us today. I hope it's going to be an interesting session, and I'm here to clear all the doubts which you might have on commercial real estate, on the assets which a platform like ours offers, and what is it in for MFDs, and how is it that you safeguard your clients and all of that. So I have about 10 years of experience in real estate and private equity, but then before that, about 7-8 years into wealth management as well. So I understand when you talk about managing money for your client, how does it work and all of that. So luckily that will help as well. Yeah, Nishant, go ahead.
Great. So Nihar, my first question is that as an MFD, why should I offer commercial real estate to my clients?
Good question, Nishant. In fact, I wouldn't consider this as commercial real estate as an option or as a different asset class which your MFDs or any MFD has to offer. Just to tell you, we as a company are pro distributors. Our AUM as we speak is crossing almost 100 million, 750 plus. 80% of my business is through distributors. I have 2,200 distributors empaneled with me. That includes a lot of MFDs, that includes certain wealth counters as well, like Edelweiss, Ladder Up, JR Money, certain new age counters as well. So there are a lot of these MFDs and MP certified guys who are working with us. We are considering this not as a commercial real estate asset, but we are considering this as an alternate investment option which your clients should have in their kitty, which generates a passive income for them, as against any other debt product which gives you not more than 6, 7, 8%. Here, the bare minimum which your clients will get is a 8% kind of rental income, which is paid out month on month to them, which is not mark to market. Even if there's volatility on the stock exchange or anywhere in the world, this does not get affected. In addition to the regular income which your client makes on a month-on-month basis, he also gets to enjoy the appreciation on the underlying asset, which is commercial real estate, which we're talking about. And obviously, there is a appreciation in the rental also on a periodic basis, which happens year on year or once in 3 years, depending on whatever that particular deal is. So that kind of combination where a fixed rent plus appreciation in the rent and plus appreciation in the capital value of the underlying asset is difficult to find. At any given point of time, Nishant, all investors, all traditional investors have at least 60 to 70% of their holding into real estate, one way or the other. This is the new way of investing or getting into that asset class, where the ticket size is only 25 lakhs. You don't need to invest 10, 15, 20 crores to buy an asset which has a AAA or a Fortune 100 or a Fortune 500 company as a tenant. So that is where I think it becomes very important for MFDs to offer this to their clients as well.
Okay. So Nihar, what are the opportunities for MFDs in commercial real estate products?
Great. So till now, and I'll be happy to share that as well. We have 750 crores which we've deployed. That has been across asset classes. We've deployed money into certain warehouses, certain industrial assets, and at the same time, we've also deployed money into a retail asset, which is where Westside is a tenant. And apart from that, we have deployed money into office spaces, which is where we have Capgemini, UBS, which is the Swiss bank, Puma. We own headquarters of Puma. So all of that is something which your clients will get to invest in, and they can easily diversify their investment across rent yielding assets. So if Nishant, I will just show this 1 minute. So this is a snapshot of all the assets which we've offered to our clients, right from Jaipur, Mumbai, Pune, Bangalore, Hosur, Chennai, Hyderabad. We've got assets where you have these kind of tenants. Reach Local is a US-based media company. UBS is obviously UBS Swiss Bank, all of us know. AGS Health is a Chennai-based asset which we have, where this company provides revenue billing systems to largely, chain of hospitals, A-grade and branded hospitals. Capgemini is also one of the tenants in our office asset. Puma, we have the head office of Puma in Bangalore, 7 floors, which Puma is taken from us. And apart from that, certain warehousing assets where Microplastics, Wakefit, Dido, which is a Japanese tenant, Stellar, Randox, all these guys are occupying our space. And clients invest into these kind of assets, and they own these kind of assets where they have these tenants, which give them a fixed rental for 3, 5, 10, 15 years, depending on what the lock-in of the tenant is.
Okay. So it's largely giving rent to the corporates who are well established in the market.
Correct. So ideally, when an individual client or an HNI client who deploys 25 lakhs, 50 lakhs, or let's say a crore in an AIF, he does not have that kind of amount to own these kind of assets, which are generally in the tune of 50, 100 crores. So here we are saying that why not fractionalize this entire bit, and why not give an opportunity to an investor who can deploy only 25 lakhs or 50 lakhs or a crore, but own multiple assets with these kind of tenants, which is otherwise not possible.
Right. Nihar, can you take us through your offerings?
Absolutely. I will take you through my current offering, which we have. So what we do is, from a given time to time, every month we have a new offering or a new asset which we launch on our platform, and it's very easy for any investors to enter and eventually go through everything. So currently, as we speak, we've launched a warehousing opportunity in Hoskote, which is in the north of Bangalore, which is where a tenant is coming. The tenant is ProConnect, which is the parent body is Reddington. Now, Reddington is, as all of us know, one of the largest distributors of Apple products. So we are constructing a warehouse of 218,000 square feet in a 200-acre park. And this is going to be one of the first boxes in this entire park. The returns which we're talking about are upwards of 8.3%. The first year returns is 8.3, and then every year after the first 3 years, there's a 15% escalation, and then every year there is a 5% escalation in the range. So average rental for your client goes up upwards of about 10-11%, and the IRR which we're targeting is closer to about 13%. The good part is that the tenant is coming in with a lock-in of 7 years, which means if your client wishes, he can stick around in the asset and continue to earn that fixed monthly rental month on month for a period of 7 years, and actually the lease period is about 15 years. So that is the current opportunity which we have. But apart from that, I will just show you all one page where you can glance through the opportunities which we just closed some time back. So there was another opportunity in Chennai where Dido, this was in Mahindra World City, where Dido, which is a Japanese tenant, client, he was a tenant. Then we had in Chennai, which is what I said, AGS Health. And then we did one office asset in Pune where Tata Autocom was a tenant. Apart from this, obviously on our website on current property offerings and close opportunities, you can see a lot of assets available.
So in a way, it's like a close-ended close-end structure wherein you raise the money and close it after some time.
Yeah. So the way you have an NFO, right? Over here, similarly, an asset is of a fixed size. Let's say if I'm buying something in Mumbai in BKC, where one floor costs 50 crores. So I have 50 crores worth of investment opportunity where people can invest 25 lakhs. Let's say everyone invests 25 lakhs. Maximum I can take is 200 investors into that. And in all our assets, luckily, we have got oversubscription to the tune of 20 to 25%. So whenever there is a client who's wanting to exit, the exit is anytime after 1 year. There's only a 1 year lock-in. Anytime after 1 year, if your client wishes to exit, there is a substantial buyer who's already waiting on the wait list who can jump into the asset, and your client can get an exit.
Great. So Nihar, how Strata is different from other players in the market?
Again, a very good question. Strata is different on two grounds. One is this is our bread and butter. It's not that we are a developer who's turned into an asset manager, or we are a broker who's turned into an asset manager. We are pure asset managers where we identify assets after doing a certain due diligence. And some of them is we do not take on assets where there is no lock-in from the tenant. We do not take assets where the asset is not complete in terms of the OC received and there's an under construction risk and all of that. In warehouses, obviously it's built to suit, so there is a 3-4 month construction period, but otherwise we don't take assets like that. We also do not take assets where tenant's balance sheet is red and tenant is not making money. We also don't take up assets where the furniture or fit out cost is done by, it has to be done by us. We want the tenant to spend that 10, 15, 20 crores in the furniture and fit out so that his skin is in the game. So there are these certain due diligence criteria which we have the asset to fit into, only beyond which we will do that. Also, we do not believe in taking speculative assets. So by that, what I mean is that I do not want to put my money onto something where there is no tenant, thinking that, okay, in future I will get a tenant. So we are very conservative from that front. And at the same time, we've given exits to more than 42 investors. So that is something which also proves that the entire cycle of identifying an asset, investing into an asset, and eventually exiting an asset is very much possible.
Okay. So Nihar, what kind of return can an investor expect from these products?
So as I said, there are two cash flows which a client gets, right? One is the monthly rental income which he generates, and second is the capital gain or appreciation where eventually when the asset is sold. So ideally, the client can expect an IRR of anywhere between 12 to 16%, depending on what asset or for how much time is he holding on. But the monthly return or the rental which he's getting should start anywhere between 8 to 8.5%, looking at the current scenario where the Fed has also increased rates. So earlier it was 7.5 as well, which is now gone to 8, 8.5, and we don't take assets which are under 8% at this point of time. So your clients' average rental yield, leave alone appreciation or market upside, will be anywhere between 9, 9.5% over the tenure of the asset, which means that that's the risk-free money which they get in a way that which is not bases any market appreciation or the market doing well and all of that. In addition to that, whenever we sell the asset, there is an inherent capital appreciation. Minimum we expect is anywhere between 5 to 6% every year because of the escalation and all of that. So that takes my IRR to closer to anywhere between 13 to 14% on a conservative side.
Okay. So when do you take exit call? I mean, when do you sell assets?
So there are two ways. One is obviously whenever we get a buyer or an interest from someone to buy this asset, we go back to our set of investors, and eventually our investors are owners of the asset. We are just a custodian, right? So owners have to decide and give us an approval whether to sell the asset or no. So whenever we have a formal offer, we go back to our investors, do a polling and a voting, and depending on 75% majority, we go ahead and sell the asset. We do not like to sell the asset before 2 years because there is a short-term capital gain implication. So we generally hold on for 2 years or 3 years, depending on when my first escalation also kicks in. But ideally, we also have a target IRR kind of an approach. Like in a couple of assets, we had a target IRR of 13 to 14%. We've crossed that, but we are yet to complete 2 years, which we complete in the coming March. So once we have that, we will start looking at selling that asset, and within 3 months, we will exit that asset. So my target IRR has been achieved, and I'm at about 16, 17% there. So either of the two, either we have a hard offer, or typically if my IRR is being achieved and giving more returns, then I will go back to investors and ask their permission to sell the asset on their behalf.
Okay. So what is the minimum ticket size currently?
So the minimum ticket size largely is about 25 lakhs for each investor. However, most of our investors come in with a fixed pocket size. They say that, okay, I have 1 crore to deploy, but I want to deploy in 4 different assets. By that, they can diversify, hold something in Pune, hold something in Bangalore, something in Mumbai, and all of that. We also have a special ticket size of 15 lakhs for first-time women investors or female investors, because we are actually promoting financial freedom for women as well, and that's a very important cause to have. So that is something which we have. So in every asset where I can have maximum 200 applications, probably 10 slots or 15 slots are for my first-time female or women investors. But otherwise, largely 25 lakhs is my entry-level investment.
Okay. So Nihar, so far we have discussed about the opportunity, but what are the risks associated with this product?
So there are a couple of risks which are associated with the underlying asset per se, not with the product, and I will tell you why. So one is, and the biggest risk is tenant risk, right? Today, every asset which we're talking about has a tenant who has signed a legal lease agreement, paid stamp duty on the lease agreement and all of that, and is on the property for at least 3, 5, 7, 10 years. Now, there could be a possibility that after 5 years, after 7 years, after 10 years, the tenant might want to move out of the property for whatever reason. So while that's a risk, I still consider that we've managed to mitigate that risk to a huge extent, and I will tell you how. So we take a security deposit from the tenant worth minimum 3 to 6 months of the rent. He also needs to give me a minimum 3 to 6 months notice after lock-in if he wishes to vacate the property. My property always is in an area or a building where the vacancy rate is not more than 5% in the micro market. So it does not get difficult for me to find a tenant within that 6 months or 3 months time. Also, we do not get a property where my uh, tenant is paying me rent on the higher side of the market. So if let's say in a particular building, the rentals are from 50 to 65, you will always find my rental or my tenant at a 50 or a 55 rupee rental, not at 65 or 70. So even if I have to get a replacement, it's easy to get a replacement at a lower rental, and hence my returns are not compromised for my clients. So these are 3 or 4 reasons how we mitigate that risk. But also very important thing is that yes, you are eventually investing into an asset where the underlying is a commercial asset. If at all the tenant moves out, and if we take 1 or 2 months more to find a tenant, and for that 1 or 2 months, if there is no tenant, there is no rent which gets passed on to investors. And at the same time, we as Strata also do not charge our management fee, which we otherwise charge when the tenant is on. So our skin is in the game from that extent as well.
Okay. So, who regulates these products currently in India?
So we come under, because this is a real estate thing. So there is a RERA license which we've anyways taken. We all the companies or SPVs which we form is as per Indian Companies Act anyways. So typically any client who invests, he gets AOA MOA of the SPV. He gets all the other documents as prescribed and as per the formats of the Indian Companies Act. So that is how it is at this point of time.
Okay. And what kind of commission structure should MFDs expect from this tie-up?
So we are very flat in that we do not discriminate between someone who's giving us a 50 crore commitment or someone who's doing just a 25 lakh. The commission or the fees are pretty much similar for everyone. They start at 3% and then they go up to a 4% slab eventually if we hit a basic number in a particular financial year. So 3% is the bare minimum which our MFDs or distributors would get if they were to successfully distribute our asset.
Okay.
And in addition to this, all the collaterals, white label collaterals in terms of marketing, all that materials, assistance from our team to speak to the clients and explain the concept to them, take them through all the legal documents and all of that. Everything is from our side, and we are there to support all the MFPs.
Okay. So 3% is upfront, and apart from that, will they have any annual fee or annual commission structure like trail commission in mutual funds?
No, unlike mutual funds, here we are upfronting the entire fee structure. Also, unlike a lot of other funds, we are very lean in terms of fee structure, and we tell it to our investors, clients, distributors, everyone. So what we earn is we earn 1% management fee every year on the original investment amount. Beyond that, when the asset is sold or exited, there is a performance fee which we make, which is only on the incremental. So there's a 10% hurdle rate. Anything beyond 10%, only on the incremental, we charge a 20/80 performance fee. This also goes down as the AUM of the client increases, and even the management fee from 1% goes down to 70 bips as the AUM of the family or the investor goes up. So there is hardly anything, and we start breaking even after the second year if obviously the money is coming through distributor and we pay certain fees to them.
Okay. So Nihar, since this is completely new product for many individuals, so how can an MFD make its narrative easy to comprehend language?
Correct. So very simple, and I think again it's a great question. So what we've done is how do we position this to our investors, right? A lot of my MFDs have told me that this is a great acquisition tool for clients. So one is MFDs, while they manage their clients' money very well, they also are on the lookout of acquiring new AUM and new clientele, right? So today, all these clients are investing already with us. We have more than 2,300 unique investors who've invested with us 25 lakhs or more. And the likes are 46 or 47% of these guys are all white collared C-level executives and employees of these companies Like I have MDs of couple of banks, I have certain doctors, lawyers, business guys, all of them. Now, I believe that all these guys, anyways, do their investment on mutual fund and any other financial product through these MFDs. But for this product, they're going back to their real estate broker or real estate advisor, who then invests him to get it to invest over here. So 99% your client already is aware that there is something like this which is available in the market. It's just for us to pitch to them or reach out to them. On the other hand, it's a great asset allocation tool where you are averaging out the overall debt portfolio return for your clients and not keeping it subject to the mark to market risk or volatility on the global indices, or at the same time even the Fed rates which are going up and down. So this is a very stable income generating asset for your client, where he should deploy his money for a minimum 3 to 5 year period and look at a 8 to 9% minimum rental which he gets, but also the upside takes his IRR to close to about 13 to 14%. So a great passive income investment option which the client will have, where he will own an actual physical asset. Nothing is just on paper. He will own a part of the actual physical asset which has a certain value, and there's a valuation report attached, where you don't risk your capital, you get your regular returns, and at the same time, the management of the asset, tenant, and everything is done by a professional company like us, which does this for a living.
Okay. So guys, you can post your question in Q&A session so that we can take maximum one. So
Yeah.
Sandeep has a question. So can NRI invest into this product?
Absolutely. In fact, NRIs can invest into these assets. Apart from NRIs, all your HUFs, trusts, we have money from public limited company which has come in. We have money in every asset. About 1 to 2 crores comes in from a certain AIF. So all legal entities can invest into these kind of assets. Great. We have a question from Mr. Hemant. Is there any lock-in or any such terms for investors stroke clients? Yes, sir. Let's understand that today when you're investing into an asset, we need to also understand what is the underlying asset, right? Underlying asset is real estate and commercial real estate. However, we don't want this to be a trading platform. So we've kept the lock-in for investors 12 months or 1 year, after which they can exit at any given point of time if they wish to. However, we strongly recommend investors to stay at least for a 3 to 5 year period, because only then you will be able to take benefit of long-term capital gain. After 2 years, if you exit, there is a long-term capital gain tax with a 20% taxation and an indexation benefit. So that will be applicable. And obviously, there is an escalation on rent which you will benefit from. So the idea is to stay invested for 3 to 5 years. However, if there's an emergency, clients can exit at any given point of time after 1 year. We have a question from Mr. Madhukar, how to get associated with Strata for Business. So we have a partner portal and our team will reach out, Madhukar, to you and everyone, and we will send a partner portal link to you. Partner portal is something which we've created specifically for our MFDs and partners, where you can actually list your clients and those clients remain tagged to you irrespective whether they invest with us or no. So there is no poaching of clients possible over here. Even if you are not aware and your client invests with Strata post that, you automatically get fees for that. So that is something which we've created only and only for our partners. We have next question from Mr. Anil. Where do we have to contact for distributing? Anil sir, we have a partner portal and you will be able to, if you go on Strata, you will be able to go on a partner link and register. But apart from that, from our side, we will reach out to you and we will also send you all the details. Someone from my team will contact you. So we currently have a 20-member team and in fundraising stroke investments. Otherwise, we are a 60-member team having our offices in Pune, Bangalore, Mumbai, and Dubai. As we speak, 10% of our company is owned by Kotak Investment Advisors. 10% is owned by Gruhas, which is a prop tech arm of Zerodha. And then apart from that, substantial portion is owned by Elevation and Mayfield as well.
Okay. So Nihar, I'll take some questions after some time.
Sure.
So I have a couple of more interesting questions for our audience. Sure. So many MFDs who are offering commercial real estate say that fractional real estate having maturity or less maturity like 15 months are easier to sell compared to large ticket commercial real estate. So can you highlight how big ticket commercial real estate makes more sense for MFDs?
No, so you're saying 15 lakhs or 15 months?
15 months,
Okay,
15
so sorry.
lakhs, 5 lakh kind of product is more easier to sell. Fractional commercial real estate.
No, absolutely, 100%. I mean, there is a platform called Grip.
Hmm.
There is a platform called Grip, which actually has, is distributing our product between 1 to 15 lakh ticket size. But
Hmm.
those investors don't come directly to us. They invest in an AIF which Grip circulates, and that comes into us. But let's understand that, Nishant, today an asset class, as I say, we should not forget the underlying asset class. Today, someone investing 1 lakh, 2 lakh might not have the understanding or maturity of this asset class. So we want to, that's the reason why we've kept it at 25 lakhs in US or globally. Everywhere there's something called as an accredited investor, right? Which is coming in India as well. So I'm saying that we want to ensure that the clients who are investing into this asset class, they understand what this asset class is. And eventually over a period of time, they will get to see the benefits as well. But yes, maturity of the client should be there to understand and invest, and that's what we want to do. We don't want to dilute it too much, because then itself client, it doesn't make any materialistic difference to the client, but at the same time client might not be able to understand. The expectation would be completely different than what this asset class or product is.
Hmm. Okay. So another key concern of MFD is rental income. So
Yeah.
what if it expire before the due date?
So there's no due date as such. As I said, unlike a REIT cannot sell its asset before 3 years. They have to hold on to the asset for 3 years. We can sell the asset whenever my investors or clients want, anytime after 1 day, right? But we don't want to sell it before 2 years, because then the short-term capital gain implication happens. The tenant cannot move out until his lock-in is there. Most of our assets, the lock-in is anywhere between 3 to 5 or 3 to 7 to 3 to 10 years. In the current asset which we're talking about, the lock-in from the tenant is 7 years. And in fact, we cannot remove them for 15 years unless they default. That is a clause in all. So understand that most of these tenants who come into our assets, we do a due diligence on the financial books as well. We didn't take up certain tenants because we understood that there are a couple of huge impact or high impact cases going on, which could eventually affect the balance sheet. So we said no to a lot of clients. So only if the business is great, only if this is a headquarter or head office of this particular company, that's when we go ahead, where we know that the client or the tenant is not moving out at least for 7 to 8 to 9 years. And our idea of holding an asset is not more than 3, max 4 years. So there is not going to be a scenario where we will still hold the asset when the lock-in is about to get over. Because when we sell the asset in the market, it still has to have certain residual lock-in for us to generate enough interest from the buyers as well.
But Nihar, what would happen if a renter defaults on payments?
Correct. So most of our assets have advance rentals, which means that today I will get the rent for the month of October in the first 10 days of October, right? So for me, the default really can't happen unless the tenant does not pay rent to me in that particular month. We have 1 month grace period. So the maximum time our clients will be without a rental is about 1 month, till the time we understand that, okay, this is a default and it's a willful default. We have the right to obviously lock them out of the property. Whatever interior fit out expenses they've done, that belongs to us, and all of that is ironed out in the agreement which is done between us and them, and the lease agreement and all of that. However, as I said, if there is a default, we will send them a notice. If after 1 or 2 defaults they still don't, then we have the right to remove them and get a replacement tenant. We have security deposit in most of the cases to the tune of 6 months equivalent rent. So that is something which we use in these kind of rainy days. Luckily, even in COVID, Nishant, we've got 0% default, and it's on our books also, and public document. We can show it to anyone who wants to see it. So we, at this point of time, distribute 5 crores of rental month on month without being default even in a single month since last about 30 months of our operations.
Great. So Nihar, how to exit this investment? Can you take us through the entire investment and exit journey through an example?
Absolutely. So today, when an investor wishes to invest, all he needs to do is he needs to go on our website. There is an invest now button. Once he does that, he will probably get an option to do his KYC, submit an expression of interest, and then he can create a virtual account through Razorpay and immediately start transferring token amount and all of that after seeing his documents which he wants and all of that. So once he does that, the investment does not take more than 15-20 minutes. But eventually, let's say whenever he wishes to exit at any given point of time, he can exit within 30 to 45 days, depending on what asset has he been invested into. So he needs to reach out to our customer success team or our investment team and tell them that, hey, listen, I want to exit. What is the valuation which I will get at exit? And typically, once he informs our team, we will look at getting investors or replacement investors into this asset. However, the client or the MFD can also on his own get another client and an offline transaction or a secondary transfer is possible. So that is something which we do. What I will do is I will take you through this particular page. This is an actual investor dashboard which your client will get an access to once he invests. So today when a client invests, let's say we've invested 25 lakhs, the client will see total interest earned on this 25 lakhs is 3.77 lakhs. There are two opportunities which he's invested in. Let's say, let's pick up the first opportunity which he's invested in. We go on to the transactions page. Client can actually see what is the kind of payments or payouts he's getting on a month-on-month basis. He gets to see the receipt of that payout as well. Yeah, so that is something which he gets to see. Apart from this, he also gets to see all other documents related to the particular asset.
Great.
So yeah.
So Nihal, let's take some audience questions now.
Yeah, absolutely.
Yeah. So Ghulam Hussain wants to understand any additional document that is required for NRI clients.
No specific document in addition to what we have, the basic this thing. But if there is, for example, tax avoidance which he wants, then a TRC certificate is what your client will have to submit to avoid me deducting a TDS over here. Otherwise, there's a TDS which gets deducted and it gets reflected into the Form 26A, even for an Indian client, a resident client, and also for an NRI. But apart from that, for investment, there is no particular additional document which we require.
So Funny Kumar wants to understand any tax benefit to investors can financial aid. Okay. So he wants to understand, can he get some tax benefit like people get in home loan? I don't think it is.
No.
Available.
So here, what you get on a monthly basis is your interest income. Hence, there's no tax benefit on that. You don't get IHP, which is income from house property, because this is not treated as rental. So hence, no tax benefit on that. But yes, as it is in any unlisted securities, if you hold on for 2 years, after that, if you sell, you get taxed at only 20%. That too with an indexation benefit. So that applies. But apart from that, no other tax benefit.
Okay, but this income would come under capital gain or
the month-on-month which we get, that comes under interest income, and the eventual exit which happens, that's when you get your principal plus the appreciation, that comes under capital gain.
Okay. Munna Chaudhary wants to understand, do you get portfolio of REs published anywhere?
No, so this does not get published anywhere, but obviously we have a newsletter which we issue on a regular periodic basis. Apart from that, it's a live update on your client's investor dashboard, which I showed you. So every client will on a month-on-month basis get to see his entire holding or entire portfolio, not only for himself, but even for his entire family. So we invested across 3-4 heads on his name, on his family name, on HUF name, and all of that. That is where he will have one short window where he can go and look at all the holdings which he has.
Anilji wants to understand minimum to it is 25 lakh and for women it is 15 lakh for some time.
For first time women investors, yeah.
First time women investor. So Madhukar wants to understand how transparent is the product for investors.
Sir, I would be very happy and proud to say that for the first time, people are saying that real estate can be so transparent, we didn't know. And how can we say that, right? So we don't buy the asset on our books, nor do we take money in our bank account. The agreement of buying the asset happens straight between the SPV where your client is investing or he becomes a shareholder of, and the seller. So there is the agreement copies, which is sale agreement, lease agreement, any comps, everything is shared with investors even before they invest. So after they have a look at all of that, once they are satisfied, they can go ahead and invest. We also give you a valuation report done by a third party agency, which is JLL, CBRE, and all of those guys, to understand and make your clients understand that this is the actual valuation of the property. And we also give you a comparison in the vicinity. So for example, if I am in a building in BKC, I am buying a property at 35,000 rupees a square feet, I will give you the sale components and lease components in that entire building and micro market as well. So you very well know that you're not buying anything at a inflated price, and you're buying something probably at a discount or at market price. So that kind of flexibility is there. Apart from that, your client has access to the bank account statement of the escrow account as well. No real estate or no fund, even your AIF fund or any of your REITs, no one does that. So we offer that also to your clients. Property tax receipts, insurance certificates, insurance premium receipts, everything is shared with your clients. Apart from that, your client has the right to write to a custodian. So every asset which is bought is overlooked by a custodian, which is Universal Trusteeship or Vistra in this case, where they can write to Universal Trusteeship Company or Vistra and independently go and also check the actual documents in physical, because we don't want to take the risk of keeping documents in our office. They're kept safely with a custodian who manages all the documents, all the share certificates, everything for all the properties and investors. So you can independently, without telling us, go back and look at that. One more way is that you can also go on Ministry of Corporate Affairs website, Registrar of Companies website, and you can actually enter the SPV name and you can see your client's name into the shareholding pattern reflecting in the same proportion that he's invested. So we are very transparent, and I think the repeat investment which we get from our investors is a testimony to that.
Okay. So Vivek wants to understand any specific licensing requirement for a corporate to work with you. I mean, if
Vivek ji, nothing specific, but we do not want people who are not actual distributors to come and distribute. So we only allow people who have a distribution license, which is, let's say, in MFDs, it could be a ARN or an AMFI license or whatever is there, or there is a RERA certificate. So you need either of this to start working with us. And there is an empanelment agreement which happens with us if there is a larger corporate and if there are many branches and all of that. So that is something which is signed. But apart from that, nothing specific.
Okay. Sanmukh wants to understand about network certificate. Is it necessary?
Not in these kind of investments, at least till now.
Okay, so how many partners are so far working with Strata?
So 2206 partners are empaneled with us, out of which, when I say active, which means people who've given business to me at least once or twice, is close to about 203 or 204. So a healthy 10% activation is there. And as we speak, it's growing up in every asset.
Okay. So Gaurav has an interesting question. So yields are on higher side. So will it sustain?
Gaurav, yes, the yields are actually not on higher side. And I will tell you why. The yields are at market. Probably the rate at which we acquire the property is at a slight 4, 5, 7% discount. And hence we feel that the yields are on a higher side. This is the market yield now. There are in Mumbai, and I'll give you a very specific city-wise idea as well, right? In Mumbai, everyone expects to sell at 6.5%, 7%, 7.5%, right? No one, there's no buyer at that. So there are so many deals in the market. There are more than 200 deals in the market in Mumbai where they're on the market for 1.5, 2 years, but no deal is happening because no one's buying at 6.5, 7%, right? I might as well put into some bonds where I'll make that money. So that is not happening. In Bangalore, on the other hand, no one is looking to sell. Whoever is looking to sell is in need of money, only then they will sell. Hence, there is a good negotiation which is possible where we know that, okay, we can get a higher yield. What we also provide, Nishant, is a longer lock-in and flexibility to the seller, developer, stroke the tenant as well. Hence, we get a higher lock-in, and it is very much sustainable, Gaurav, because you pick up any of our 17 assets which we've done, our starting rental is the lowest in the micro market. So today a tenant, let's say Puma, right? He was in Indira Nagar paying $120 as rent. He moved to Mahadevpura, which is about 700 meters before Whitefield, before Phoenix Mall in Whitefield. To us, he's paying 42 rupees, 1/3 reduction in the rent. While the market is at 56, there is Bagmane Tech Park, which is at about 60 rupees. So all these guys are coming to me at the lowest possible rent in the micro market. And or they know that even after 10 years, they will be at the lower end of the curve. So that ensures that these guys are not moving out.
Okay. So Sanmukh wants to understand about the KYC. So
Yeah, so it's a basic KYC which we do in any investment. So obviously your address proof, your PAN card, and your bank check is what is required for from an investment point of view for any investor.
okay. Shalit wants to understand, do we have any option called dividend or growth? No, I don't think it's a rental income. Shalit.
It's an interest income which you get. So there is absolutely no other option. So there are two things, and I would like to explain this, Nishan, taking 1 minute. We creating an SPV, which is a private limited company. So every asset is individually held in a separate private limited company, and these investors become shareholders of that company. To avoid double taxation or at SPV level and then at investors level, we under first thought that we could do an LLP, then eventually take an income from house property deduction and pass on the remaining as a dividend, but then DDT would have been paid. So all of that would becoming more expensive also. So then private limited we did, and we said we'll pass on interest income. Now the structures which we issue to investors is in a combination of equity and CCD, 10% equity, 90% CCD. Why do we do CCD? Because eventually when the asset is being sold, I convert these compulsory convertible debentures back into equity and we sell it so that there is no short-term taxation even on the CCDs, and it becomes very seamless and smooth for the incoming buyer. And we sell the SPV rather than selling the asset, so there is no stamp duty for the incoming buyer, which means a slightly higher sale price for me.
Okay. Nihar, one last question I would like to ask. Can you take us through the process of empaneling with you?
Absolutely. So we have our Strata website and we have a partner portal as well. So there is a particular link which we will send to all the guys who are there on the call today. And they can happily log on to that and within 10 minutes upload their basic KYC documents and also certification, which could be either AMFI or any other RERA or whatever they have. And they can probably empanel with us and they can get access to the partner dashboard. Once that is done, Nishant, a dedicated investment manager from our team will reach out to them, take them through the entire process of how to register a lead, how to make create collaterals, co-branded collaterals or white label collaterals, whatever they want, and all of that. So that is something which from our team people will absolutely take them through.
Okay. So with that, we have come to an end to this interesting session. Thank you so much, Nihar, for your time.
Thank you, Nishant. I see there are a lot of other questions also which are there.
Yes.
I would request you to just take down these questions and
Yes.
possibly send it to us so that we can address it on a one-on-one basis as well.
Yes. We may definitely consider it.
I would just like to take one question if you give me a minute. There's a question from Mr. Rao. Does 8% per annum interest distribute from the very first month? Yes, absolutely. Right after 30 days of registration of the asset, your rentals start. So that is something which your client gets, and it's not 8%. In fact, in the first year, it's always 1% more because first year's management fee we pass on to our investors, something called as a top up. So generally in the first year, it's upwards of 9%.
Okay. So guys, don't worry. Whatever pending questions we have, Nihar will be happy to answer that. We will take these questions and Nihar will respond it to you directly.
Yeah. What I can do is I can also send out an email to everyone.
Yes.
Nishant, and we will then reach out and connect. Thank you so much.
Yes. So, and finally, I thank each one of you for being such a wonderful audience. Have a great day, guys.
Thank you, everyone.
Bye.